Hey everyone, I have some really shocking news to share with all of you today. I sold 14 of my dividend stocks. That's right. I used to own 50 stocks in my dividend stock portfolio. Now I own only 36. Now the 14 stocks that I sold represented about 15% of my portfolio value, but only 12% of my dividend cash flow. Now I own 36 dividend stocks now, but I'll probably own 37 pretty soon because I want to add the ETF, the Exchange Traded Fund, SCHD. That's something that I'm going to be building brick by brick over the coming years. Now, why did I sell these 14 stocks? What I did is I sold them because we're going to be making a real estate investment, and I needed to raise some equity, some capital to go ahead and make the real estate investment above and beyond cash that we had on hand. This comes at an interesting time because in my last video, I shared how I'm already going from that rapid accumulation phase of dividend investing onto the optimization phase where I use portfolio to pay dividends that I will use for living expenses. And so all of this is happening at an interesting time. I want to discuss that in the video today. In the video today, I want to discuss my thoughts around selling dividend stocks. I want to discuss the 7 criteria that I look at when selling dividend stocks. I also want to share in the video today 3 of the dividend stocks that I sold, the most shocking ones. Certainly in forthcoming videos, I plan to share more insights around my process, my journey going through this, because this is a big change in the portfolio. I've reduced the portfolio value by 15%. So now the portfolio size is only 85% of what it was just a few days ago. And so this is a big change for me. I have a lot to share. Get ready, everyone, for a really exciting dividend stock investing video. Welcome to ppcian. This is dividend stock investing for everyone. All right, everyone. So I want to start off today with some thoughts around selling dividend stocks. So as you can see on the screen in front of you right now, I want to share the biggest insights I had from this experience. First and foremost, selling, it can be a little bit painful, but it's also an opportunity to tighten up the portfolio, creating a well-oiled machine, a portfolio that one can be proud of. I'm at peace with my portfolio changes, and I look at the opportunity to really improve portfolio structure. Those who have been following my videos already, you already know that I'm going from this rapid accumulation phase into the optimization phase. And I kind of look at this opportunity as a way to kickstart the optimization because I'm going into the optimization phase. This exercise of selling 15% of the portfolio, it forced me really to focus on the stocks I don't need to own. It really helped me focus on tightening up the portfolio. It helped me focus on choosing which 36 stocks to keep. What are the best stocks to keep? I had to do a lot of analytical work, a lot of trade-offs. I had to look at a lot of different scenarios to hone in on which stocks not to keep. And I'm really proud of the 36 that I am left with. Some more thoughts, as you can see on the screen in front of you right now. Also, I went ahead and I realized that reducing portfolio size, look, it can be a little bit painful. I'm really excited about our real estate investment, but also it's painful because I love my dividend stocks. But what I realized is, look, it's time to hustle again and get back into that accumulation mindset a little bit, even though I just left the accumulation mindset to be an optimizer. I realized that it's time to be scrappy, time to find some ways to save money. And I guess I'm going to be in this phase between rapid accumulation and optimization for a while here, and maybe hang on to that accumulation, kind of that mindset of hustling just a little bit longer. But what I could say is, if you're out there and you've ever had to sell dividend stocks, you've ever had to reduce your portfolio size, or maybe you might have to in the future, it's not necessarily a bad thing because I'm kind of excited at this point to find ways just to make that 15% back. I want to keep going. As you can see on the screen in front of you right now, I have some more thoughts to share. I'm turning off reinvestment for most stocks right now. Here's what I'm going to do. I'm going to be using dividends to supplement living expenses. That was the topic of the last video. I still am moving more towards that optimization part of living off of dividends versus accumulating dividends. But also I'm going to use some of my dividends to rebuild cash reserves because cash reserves were depleted with the real estate purchase that is forthcoming. And also, I'm going to use dividends to really rebuild the 15% and kind of skew the reinvestment, if you will, rather than reinvesting into the stock that paid the dividend, using some of those dividends to selectively reinvest into SCHD. I really like SCHD here, especially with my portfolio of 36 stocks, because it's going to give instant diversification in a world where there's a lot of single company risk. And over long periods of time, I'll link to it in the pinned comment. I did a video on it. SCHD tends to beat the index and carries a higher component of its total return in cash flow, which I can use to pay my bills right now. Look, this is what I highlight on the screen. Life is complex. Dividends are just a tool that's available to us. The dividends and even the underlying equity, they're meant to be used when needed. And I saw a real estate opportunity that made sense. And so you know what? 15% of the portfolio is gone, but it will be back in the future. And so here's an optimization thought exercise for all of you following along at home. If you were forced to sell 15% of your portfolio right now, what would go first? Which ones would you sell? I had to do this in real life. I actually went ahead and I sold the stocks. By the way, I'm going to share some of the stocks at the end of the video today, but go ahead and check out the pinned comment below. I'll link to my Patreon. I already shared all the stocks that I sold over on Patreon and on Corner Patreon tomorrow morning on Saturday. I have a Zoom meetup as well, where the topic of the Zoom meetup is just a conversation, an informal conversation, meet and greet amongst investors, the Corner patrons, and we are going to explore the topic a little bit of just overall selling stocks. How do we all like to sell stocks differently in our own portfolio? So anyway, check that out. But when I was going through my portfolio and I had to sell the stocks, there were really 7 criteria that guided how I did this. And oftentimes, certain stocks would fall in under 1 or more, oftentimes 2 or 3 of the criteria. So I want to share those with you because these were really helpful for me as I optimized my portfolio, because I really looked honestly at this exercise as the first step in portfolio optimization, because now that I've gotten rid of the stocks I don't need to own anymore, I'm down to 36 and I'm going to add 37 with SCHD. As I rebuild that 15% in SCHD, I feel that I have a more optimized portfolio here than I did before. And so anyway, as you can see on the screen in front of you right now, let's go through these. And so number 1, criteria for selling dividend stocks was really no dividend yield. Now, this is funny. How do you have stocks in your portfolio that have no dividend yield when this is a dividend portfolio? I actually had 2 stocks in the portfolio that paid no dividend. And the reason I had these is I felt one day they may pay a dividend. They have characteristics of dividend stocks. But you know what? When it comes time to actually live off of dividends, when it comes time to pare down a portfolio and live off of dividends, a collection of stocks no longer works. I realized that I own these non-dividend stocks more as collectibles, more as fun stocks, if you will, during the accumulation phase. But during the optimization phase that I'm in now, and during this phase now where the portfolio is a little smaller, I have no room for it. I just can't have stocks that don't pay a dividend. The second criteria that you can see is overvalued stocks. When I started optimizing my portfolio, I realized that look, there are some stocks in the portfolio right now that look to be honestly wildly overvalued. And oftentimes the ones that were overvalued that I ended up selling had a minuscule dividend yield. One case in particular, which I will share at the end of the video today. I felt when you have an overvalued stock with a minuscule dividend yield, what's the point when I'm trying to live off of dividends now, when I'm trying to use dividends right now to rebuild cash reserves, when I'm using dividends right now to try to rebuild that 15% over time, I can't have stocks like that are so overvalued in the portfolio. But let's keep going. As you can see in front of you, the third criteria that I looked at, the third lens that I looked at when I was trying to pick which stocks, because some of the stocks I picked to sell, it was really easy. Some of them were a little bit more difficult, but the third one was just kind of lower yield, fast dividend growers. Those dividend stocks with yields less than 1.5%. Now, I didn't sell all of them, obviously, but oftentimes those dividend growers I had with yields, current yields right now under 1.5%, they have high dividend growth rates. That being said, these were easy targets to consider selling, and there were some exceptions just because right now I need current yield. I need it more than ever. And so those ones that aren't paying a lot of current yield, they were easier candidates to consider selling for me, especially if they also fit into one of the other buckets that I have discussed or I will discuss out of these 7 criteria today. But let's keep going. As you can see on the screen right now in front of you, I want to share number 4. And so the number 4 criteria was really positions that add complexity, the long tail of ancillary positions. Look, my life is getting more complex by the day. This new real estate investment, for example, it is adding more complexity to life. I'm a husband, a father. I have a dividend portfolio. I have so much going on day to day in my life that I realized in this optimization exercise that I would really rather have 36 stocks than 50, or soon to be 37. And so when there were positions in the portfolio that were part of this long tail of ancillary positions, those were ones that I did consider selling, and I did sell a bunch of those. And these ancillary positions, they might have been fun for me during the accumulation phase, but now I'm in the optimization phase and I'm trying to live off of dividends. I'm trying to do the real estate investment. I'm trying to do so many different things at once. They just add extra work and overhead. And rather than buying the long tail of ancillary positions one by one, why not blanket buy it through a very highly qualified, high quality ETF like SCHD. Put in the comments below, by the way, if you own SCHD. I know this is a favorite in the dividend investing community. I'm kind of late to the game on SCHD, but I did recognize it a while ago in one of my videos and told you all that it was in my future, and now that time has finally come. And quite frankly, building the portfolio kind of back, that missing 15% brick by brick over the coming months, over the coming years, I'm probably going to be mostly focused on SCHD, just stacking SCHD week in and week out, because that will build back those ancillary positions. It's just I don't have to manage them one by one. But I want to keep going. I have more to share, as you can see in front of you right now. The next criteria, this is number 5, is loser stocks. This one gets really complex, but I often like hated out of favor contrarian opportunities or sentiment investments. That being said, when I have to optimize the portfolio, I have to reduce the size of the portfolio in addition to optimizing it. I'm trying to live off of cash flow on a reduced size portfolio. It's really hard to rationalize keeping a loser. And it's really hard to rationalize keeping a loser when something has to be sold. And if I kept that loser, I would have to sell something of higher quality. And so I would rather sell a loser than a winner when trying to raise capital. Now, you can probably all guess what the loser is. I will share it at the end of the video today, but this was something that I didn't anticipate selling until I needed to raise capital. But in this situation of raising capital, I just could not rationalize selling something of high quality and keeping the loser. But let's keep going. As you can see on the screen in front of you, the next one I want to share is just fundamental changes. I had a large portfolio of 50 stocks, and there was one stock I can remember in particular where the fundamentals really changed. I was holding on to it. I was even adding to it a little bit, and the payout ratio is over 100%. I don't think the fundamentals of that particular business are really coming back that quickly, quite frankly. And so if I saw in my portfolio something that was weaker on a fundamental basis, naturally, in reducing portfolio size, I had to sell the fundamental stock that had the fundamental issues. And so, again, on Patreon, I share all of those. I'm going to explain more of this in coming videos here on YouTube as well. But for today, I'm going to share the top 3 that'll probably surprise the heck out of you at the end of the video. But let's keep going. I have one more thing to share, as you can see in front of you right now. The next criteria, the last criteria, number 7, and again, rarely was it one of these. When I was choosing the stocks to sell, it was usually a combination of these criteria. But I looked at portfolio overlap. If I'm paring back the portfolio anyway, boy, I have to look at overlap. And I have to look, do I have a redundancy of positions in a certain sector? If I sell certain stocks, does it create an overweighting in another sector? I have to look at the portfolio cohesively. I have to look at the portfolio as removing one position, what it means for the rest of the portfolio. I'm going to tell you up front, by making the changes I did, I'm now really underweight tech. I'm underweight industrials, and I'm overweight sin stocks just because I didn't sell sin stocks, but I did sell tech stocks and I did sell industrial stocks. And so those are the 7 criteria. And what I would say, if you've never sold dividend stocks before, don't plan to sell dividend stocks. I never planned to sell, but life changes and an investment opportunity came my way that I didn't want to pass up. Consider the exercise, just the thought exercise of, hey, what if you had to sell 15%? Which ones would it be? And as you go through the exercise, it's so funny what you end up hypothetically selling. It may surprise you and it may help inform going forward how you decide to manage your own portfolio. But of course, I'm just sharing my personal journey here on YouTube today for fun and entertainment in the process that I personally went through just for fun and entertainment purposes. And certainly others out there in the community, you may have a completely different strategy when it comes to selling stocks. Put in the comments below, have you ever had to sell dividend stocks? Did you ever do that, go through that exercise? And how did it pan out? Which ones did you decide to sell? What were your own criteria? I would love to know, because I have, in my history of dividend investing, there have been periods of time where I've sold stocks, and usually it has been around having to raise some money for some kind of real estate transaction. Anyway, this is the moment you've been waiting for. I want to share the 3 most kind of wacky, crazy, exciting stocks that I sold that will probably surprise you big time. Number 1, check it out. It is Apple. Believe it or not, I had a ton of money tied up in Apple. I sold it at $177.93. I received a really nice gain on this one. I locked it in. And the reason I sold Apple, even though it was a core position of mine, is look, it was a core stock, but plans can change. And I had to sell something. I'm going to sell the stock here that I felt, one, is overvalued at a PE forward basis around 30. I wanted to sell this stock because the dividend yield, I don't have it in front of me, but was around 0.5%. And quite frankly, if I kept it, it would have meant selling something that had a more sizable dividend yield and a lower PE ratio. And when I'm in an optimization exercise, I couldn't afford to do that. Right now, for me, dividends, cash flow is more important than ever. I'm turning off all reinvestment more or less. I might leave it on selectively if I see a few stocks that are undervalued, but more or less, it's all turned off. I need the cash flow coming in right now to rebuild cash reserves, to rebuild the 15% that I want to put in SCHD, or more, quite frankly. I might go up to 20% in it or more. And I want to use dividends for living expenses. Apple just didn't make the cut, but I could always add it back later. And so I did not feel bad about selling this, even though it was a core stock, for those reasons. It really fell into those 2 buckets of being overvalued and being a ridiculously low current yielder. But I love the company so much, and maybe I'll buy it back one day. We shall see. Now, I want to go on to the next one, because this one might shock you even more than the first one. I did it. Check it out. I sold 3M. And so this one was, whereas Apple was a large capital gain, this one was a large loss. And so the gains will offset the losses. That was part of it as well. That was probably one of the criteria I should have listed as well, as just tax considerations. I wanted to try to balance the gains and losses a little bit. I didn't want to sell all stocks that had gained to trigger tax consequence. I wanted to even them out a bit. And so this one was a large capital loss. This one was tricky. I believe that this stock is a contrarian sentiment opportunity. Sentiment is so low. I see the value. That being said, When the portfolio is smaller in size, I just did not want to wait for a turnaround. Also, put another way, I have a smaller portfolio. I have less tolerance for risk. I have more money in real estate, less money in stocks. Stocks are liquid. Real estate is very illiquid. I had to think about things from a risk mitigation standpoint. Also, I think the PFAS risk is starting to emerge. I'm seeing it in the news. I didn't want to shoulder it in a smaller portfolio, whereas I may have been more patient and willing to wait it out in a bigger portfolio. I also really made the decision to sell just because I couldn't rationalize holding this loser stock, quote unquote, when it would have forced me to sell a position I deemed of higher quality. And so this was a deep cut. Look, if I only had to sell, say, 10% of the portfolio, maybe I would have been less likely to sell this, but because I had to cut kind of deep and sell 15% of the portfolio in terms of portfolio value, it got to 3M, and it was pretty apparent to me that from a loser standpoint, this was one I didn't want to wrap my mind share around. And as I had mentioned, my life is getting a little more complex, more going on in the real estate world, more going on as always with dividends, more going on with family life, more going on with my life. There's just so much going on. I didn't want to tie up the mind share in 3M with the pared back portfolio. So that's where I'm at with this one. And this one, boy, it has been a interesting stock, to say the least, over the years. But I do wish everyone who continues to be in 3M all the greatest out there. But now I have sold my position. And so I have one last stock I want to share today. I'm just sharing 3 in interest of time. If you want to see them all, they're on Patreon. Check out the pinned comment below. And on Corner Patreon, again, I have a meetup tomorrow morning on Zoom. So I got to edit this video and publish it tonight for all of you. Thank you for being patient. It has been so busy. But as you can see on the screen in front of you right now, the third one that'll probably surprise you a bit is Colgate. This is a quality, larger position in the portfolio, and it was a tough one. But when you're digging deep and you're cutting deep and selling 15%, there can be a number of different reasons to sell positions. And ultimately, the reason I sold this particular position in Colgate is I just realized, look, by virtue of selling off Apple and 3M alone, I am so underweight tech and industrials, and I'm going to be so overweight consumer non-cyclical that I have to balance things out a little bit. And I already own other CPG stocks like Unilever and like Procter & Gamble that I really felt I could live without Colgate. I had made a gain on Colgate. I felt that there's nothing wrong with owning Colgate here, but it was more of a holistic portfolio balancing decision. And so you can probably guess a lot of the other stocks that I sold as well. But I will continue to discuss this topic over the coming weeks here on YouTube and on Patreon as well. And I think for me now, I'm back in the camp where I'm in that unique space between rapid accumulation and optimization. And now it's time really to hunker down and continue to rebuild the portfolio while seeing the real estate investment through and trying to juggle so many things in life. But got to keep things interesting, got to take risks from time to time and make changes in life. All right, everyone, I really appreciate your support here on YouTube. If you enjoyed the video, go ahead and please click that like button. It means the world to me. I look forward to seeing you in the comments. Don't forget to subscribe. I have new videos on the way all the time. And of course, I want to let you all know, in terms of full disclosure, I do own most of the stocks I mentioned today. I don't own, but 3 positions actually I want to mention in my full disclosure today. In terms of full disclosure, I am long Procter & Gamble and also Unilever. Also, I plan to initiate a position soon in SCHD, and I plan to buy that darn thing almost every week. And so that's going to be a unique pivot for me in terms of my overall strategy that realizes how our world is changing right now as well. Now, I also want to mention, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. Today's video, it's just for fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's really late on Friday night. As always, I'm here filming. I love the community, and I hope you enjoyed the video, and I will see you all in the next Dividend Stock investing video.